Good afternoon, ladies and gentlemen, and welcome back to another episode of the Black Swan Capitalist. I'm honored to be joined by a dear friend, Francis Hunt, someone I deeply respect and admire. I've learned so much from him over the years. Francis is an expert in market cycles, macro and microeconomics, geopolitical shifts, financial infrastructure, and digital assets. He's also a tenacious researcher dedicated to exposing some of the more nefarious transitions happening in our economy and how we're being bridged into a digital ecosystem. Francis is a passionate advocate of sound money, precious metals, gold, silver, and other commodities, which is something that we align with very well here at Black Swan Capitalist. Truly grateful to have him on, not as a guest, but really as a mentor whose wisdom and courage has certainly inspired me and it's changed lives by providing invaluable insights. Francis, sorry for the long introduction. It was necessary, but it's such a pleasure to see you again.
Very flattering. I mean, you guys are uncorking some real value for so many people, and many people of my age group and older are impressed and are appreciating the quality of your content and, you know, the robustness of your research. And both of you, like a tag team wrestling, just keep slamming the facts and the truth. And also, you've got an exceptionally good read for early years. And finally, for those that don't know, I'd like to bring in the fact, it's slight personal information, but congratulations on your forthcoming nuptials to what looks like a beautiful lady, and everyone should give you a like on this video for that point alone.
That's very sweet of you and very kind. Thank you so much, Francis. We have a lot to cover today, so let's kind of dive right into it. For starters, I was thinking maybe you could just bring us up to speed on what you see happening in the markets overall. We certainly have witnessed some massive short positions, significant liquidations, and volatility across multiple assets. And let's just go ahead and start over there, and we'll kind of bounce back and forth and tie it deeper into the subject transitions.
Mm-hmm. I know you're, both an emphasis on crypto assets, but you're also very smart and broad in that you don't go entirely all in and not care for what's going on in the traditional market realm. And you consider yourself that the precious metals markets are an important market. So maybe we'll start there. It's got a little bit active again in the precious market space. I'm busy noticing a little bit of a Thursday sell-off slam, but the overall story, this is on a very low time frame, by the way, but the overall story, generally, if we go up to a slightly more sensible time frame, has been the reflation of gold. Many people were suggesting, particularly in the Bitcoin maximalist space, were suggesting that there was going to be a major rotation into Bitcoin. Let me pull this through and maybe just for a second take some of the lines off there. There would be a major rotation trade out of gold after the high was put in at the 3,378 here. Many suggested that's it, gold has topped, and these funds would be now rotating into Bitcoin. And I'll call the lie on that one. I don't see clear evidence. Bitcoin is actually worse off from its last all-time high by percentage. It is, of course, a higher beta asset in fairness to Bitcoin. But this is a very encouraging reversal movement that we're seeing, albeit we're having an interesting skittish day today. I would argue that we've made probably the beginning of an inverted head and shoulder that has broken. We may get a revisit to the neckline, but I would put the neckline roughly along that pink arrow and highlight the left shoulder, very minor right shoulder, and then the larger head that we have over here for potential to the upper echelons of 4-4, which would point to a new high. So gold generally looking in good shape for a turn. I will point out, however, that the last 8 hours, the US session so far has brought it back quite a bit. But you have what was a kind of resistance, a neckline. It's probably you're looking at now as a zone of support. It's not uncommon for a revisit to the neckline, which could be on the cards here, especially given we had quite a small right shoulder. There wasn't much room for coming down. People were ready to come back into gold. So gold is clearly getting attention again and is getting bid up, despite, as I say, the last 2-4 hours. Our overall thesis is that this continues to be a long, extended bull cycle on the precious metals side. And it's similar for silver, which was actually outperforming, by the way. And the gold-silver ratio is something we probably owe it to ourselves to have a look on as well. Let's just go, Amanda. It has run up to very, very close to its previous highs. If we just open that, there was a head and shoulder there that called the top, by the way, for the silver markets after those two slams that came there. The first warning slam, the bigger slam when you went marginally higher, that set up the head and shoulder, that brought you down. And since then, we've also been in a reversal kind of structure, and it has come with very close to within highs again. So for people that are invested in the rotation trade out of precious metals into Bitcoin, I will say so far that there's no clear evidence that is actually taking place. And even if we take with the sell-off that has happened in the last few hours, you're about 3.78% on silver from its all-time high. And that the more recent high was literally 0.14%. You barely missed making an all-time high, which is quite possibly why the sell-offs are coming in on particularly the silver market, for which everyone I'm speaking to on bullion dealer side, excuse me, has real problems on finding the silver stuff. In terms of that, that's 100 ounces to do your shoulder presses in the morning, by the way, Versan. But so I would start with the precious metals. I will probably also highlight, let's do this as well, and come across and bridge into the digital assets, which is important. Bitcoin is still the king, despite what we say about it as all things in the digital asset spaces are for us captured. We've been waiting for 3 sell-offs. So in terms of what we've been saying on the crypto sniper side, we've said, listen, that's a 1 slam sell-off. That was the all-time high at 126, by the way. This was a broadening structure. It was an ascending. That means that the splitter line, that midline that I've drawn here, is pointing upwards. An ascending megaphone, which means continuation to the downside. You've got a second wave of selling. So that's wave 1, that's wave 2. I'm doing a Greek 2, and I'm afraid to say this is also a broadening structure. Another ascending megaphone on a slightly smaller time frame, probably less extreme, but you can see now that third wave is breaking. And the key levels that this occurred at is the 108. I want to highlight the 108. So I'm on a bit of a low time frame. I'm on 4 hours here. It's almost easier to spot if I go up a little bit and get a bit more space for us. We're in a bit of a phone box there.
Yeah. Small screen.
Oh, am I still sharing screen? Sorry, let me. I do apologize.
No, it's fine. It's fine.
Yeah, we are sharing screen. Yeah, good. That's better. I thought I'd failed to share screen here, and I was flying blind, making everyone fly blind. So we talk about 3 waves of selling, and the point being, it was quite a harsh first wave right there, and then the second wave out of a continuation pattern. And we've been warning the community that, again, crypto, particularly Bitcoin at the moment, because we'll talk about dominance in a bit, was likely to fall. And the other elements I was trying to bring in is we have these key levels of 108. You can see how they are just run, and then the continuation pattern forms sitting on the 108. We said the next level was the logical round number, 100. You can see it just run twice, key level just run, and that's your entry. You could have got short at 102 if you were tactically trading Bitcoin, and we are into a third sell-off. So people will go, okay, smart guy. It's easy to be smart in retrospect. Where's the next key level? The next key level for us is 93.
Right.
Which is, yeah.
I can add something real quick to what you're saying. I want you to continue. So would you agree that like what we're seeing now is, I mean, if I'm not mistaken, there was this coordinated effort by these AI videos from the Bitcoin maxis to the strategy to really divert attention and capital away from sound money and into these controlled digital rails like Bitcoin?
Yes, that's my take. A short answer. I mean, I was overwhelmed by someone who's active in both crypto and gold with absolute cut and paste. It almost seemed like during the CV19, you know, when you had the memes that went around with every localized American TV station repeating the exact phraseology, you know, and they are set out to undermine our democracy, you know, and you had the different talking heads, the man and the girl on different, all the different. I got that weird feeling about it, and I was going, wow, they were really pushing to try and get everybody to buy Bitcoin right now. The other thing, Bitcoin and general crypto should be somewhat concerned with is that a lot of OG wallets are completely emptying out of Bitcoin. And I'm talking about 15-year, 13-year, 12-year long-term hodlers that are selling out in billions. Now, the cope narrative is, yeah, it's all going into BlackRock. BlackRock's buying it, and you know, the ETFs and institutions in OTC markets. That's why you're not seeing the price move. That's nonsense. If they were selling OTC and the price is not moving in the real market, that's because they're being sold cheaper. So you should be a concern that you're not getting true price discovery in the exchanges. If they were being sold for more or equivalent, people would be buying in the exchanges and the normal price discovery mechanisms, and the market would be moving up. So it's very hard to make a narrative that there's people wailing in when the exchange markets are going down like this. It's a very tough sell. But I've also seen these sudden new exploded in followers type guys saying, you got to stay the course. This is happening. There's a massive wave buying in the OTC market.
Trust the plan, right?
Yes, the trust the plan guys, 100%. So we've seen quite a bit of that. Let's be frank. If it's good and it's being demanded and the pricing is right, it should go up. If it's going down, it's because there's more aggressive selling than there is buying in the exchange markets. And I don't care what you want to tell me OTC, but it must be going on at lower prices, which actually further undermines the price on the exchanges that we get to buy at. So none of this is bullish. And I think you can sell to 93, and the next level below that is 86. And all of those blue lines in light blue have been validated many times for us before. So, I mean, let's just take the 108 just so that people don't think, you know, we just randomly select these levels. We've been talking about the 108 as a significance level since this double top that both tapped out and just ran the 108. Neckline over there. There was your M ... made target to the downside over there. So you can see these levels have been significant before. Some of these others, the neckline, for example, from that double top, 93, the neckline from the reversal off the lows when you were here, that's also 86. So I think you could probably run the 93 mark. We'll see what happens after that. But it's quite clear to us that you are not in a particularly bullish state right now in the short term. So I don't feel that the money is flowing into Bitcoin in terms of the rotation narrative. Again, something you love, Versan, I know, is here's a key point that I want to make to everybody watching this. You don't have a reasonable basis of account anymore. Fiats are in such a convexity of sell-off in value that they have become such slippery old monkeys on greased poles that the basis of account, $1, a euro, a pound, they're all falling together at slightly different rates, but the degree, due to the debt debasement, the interest rates, etc., on the debt and fiat are the same thing virtually. Debt is just postponed fiat with a rental agreement attached. So it's all, the real bubble is the fiat debt system. It's not gold, it's not Bitcoin, it's not anything else. The real bubble is that. And I think even maximalists will agree with me on that point. But when we compare the recent performance now of gold versus Bitcoin, this is unlog scaled. just to give you the fullness of the feeling, but you would have needed 40.8 ounces to secure 1 Bitcoin of gold. That has now fallen below 24. It's at 23.68 now. So Bitcoin is shedding gold value. And I encourage everybody, no matter whether you're a gold fan or not, you think it's old relic for old bald men, that's okay. You can think that. I also listen to elderly commentators and think they don't get it. It's new, it's different, everything, da 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 da. But I would encourage you to consider valuing your own personal worth and many things like the stock market in gold ounces, because the dollar is in debasement territory along with the debt markets. The proliferation is extreme. And this is not a technical good move. It's a rolling over, and we've been down 1, 2, 3, 4 months in a row. Let me hand back to you a bit to bring you back in on that, because
No, that's fine. There's just so much to unpack in what you're saying here. Let me move this. My apologies. Okay, there we go. So first things first, just to give those who don't understand charts some context, basically what you're seeing and what you're saying is that the market is indeed signaling more of a correction. Is that correct?
It's short term for Bitcoin. I think you go to 93. I'm not ready to say that's the top. It might be, it might not, and Bitcoin only goes down. I did want to show you Bitcoin dominance, by the way. And I think this is an important one, because we've been bears since what we consider to be a top. And there are other influences. Excuse this technical mess with lots of lines. I will reduce the noise a little bit for you now. But for us, this was the Bitcoin dominance top. Let's make sure I'm sharing. Let's do the share.
No worries. Can I add something while you're
yes
together? Okay, so one thing I want to clarify for the audience is those who really understand the financial markets understand clearly what's going on here as far as gold and the whole Bitcoin rotation. What they're doing is they're suppressing the sentiment behind metals. They're manipulating the futures market, and they are indeed creating this illusion that precious metals are dead money. And simultaneously, they're inflating the narrative around Bitcoin being digital gold. Just to clarify, that is very misleading, because Bitcoin isn't really a neutral asset. It's also highly traceable, regulatory boxed in, you could say, and it's increasingly becoming more dependent on state-controlled liquidity on ramps. And that ties us into the broader discussion about how this is really psychological, because what they're doing is crashing the gold and silver market, or manipulating it, I would say, not crashing it, through the paper manipulation. And that's where retail investors who don't understand the dynamics behind this financial infrastructure, they're disillusioned, and they're redirecting their attention towards what appears to be this new solution. And this kind of ties into some of the things we talk about here. But we always recommend everybody to have physical assets and physical metals. That way it's outside of the digital infrastructure, and then you're sovereign. So I just wanted to add that.
No, that was very important, and I applaud that statement immensely. So there will be some people that go, oh, this guy just hates Bitcoin. Not at all. It was, I'm dispassionate to all of crypto. I am interested in what will go up. I don't think anything in the crypto space you can trust. The difference between, say, XRP and XLM and Bitcoin is XRP and XLM never really set out to tell you that it was a liberty coin. The early stages of the Bitcoin movement was your freedom, your own central bank, everything, all these notions that don't get discussed anymore. People like Roger Ver get jailed, extracted against. McAfee's gone, under suspicious circumstances. A whole lot of things have happened. And now it's BlackRock and Michael Saylor, who's all about, a totally different narrative. So people have missed the hijack that has gone in. And my personal opinion is it's less of a hijack. It was planned to captivate the libertarians from the beginning. They thought if they caught the libertarians, everyone else will follow, because they don't do their research. People are followers, create loud enough influences, etc. But we were actually bullish and said Bitcoin must lead. When it broke out here, in fact, let me use a third color. We'll go for Agent Orange here. When it broke out of here, we said you want to be Bitcoin. Bitcoin is the dominant one. This is it. We came out of this period and Bitcoin dominance. But of course, there was also some when was our bottom of our bear market? I'm trying to remember now. It was it 23 roundabout? I'll have to check. But anyway, during this period, there was no point having too much exposure to alts generally. Solana possibly outperformed Bitcoin for some of that. It had a very big start. But most of the time, for most people, Bitcoin was the core hold. We got suckered in early with a top call on Bitcoin dominance on that price behavior, and we were shown to be wrong. So we were early, which is the same way as saying wrong. We've called it again here. Now, I don't think we're going to be shown to be early for a second time, but there's still people like Ben Cohen that will say, the only thing you should own is Bitcoin. Everything else is a SHIT coin, etc., etc. If you're looking for growth, our opinion is that is a bad view, and that this is now a beginning of a take, where we will see other alt tokens, much like XRP, and we'll mention some of the other candidates, start to outperform, or then I'm wrong and we run. But our whole hypothesis on Bitcoin dominance is the following, that in actual fact, each time dominance doesn't return to the previous high. Originally, dominance was 99%, then it's tapped out at this area in the previous, and our opinion is it's now tapping out in this structure. And each time you will get that, then you'll have a bear market at some point, and you can, typically Bitcoin sells off less than most of the total cap of altcoins. But each time less so as well. So what you're actually getting, and we find this easier to see when you invert the chart, what you're actually getting is, for us, a massive continuation pattern, which will set up something that upsets Maxis when I say it, but in actual fact, it's something that we see will be probably coming for Bitcoin, that its long-term dominance position will be negated. So if I type in BTC dominance here and show it to you like this, and just go back to a more reasonable time frame, that we are in a continuation structure like that. Now, BTC dominance is getting lower the higher we get. So don't get confused by that. I'm going to provoke some people's autism by doing this. But generally, dominance was at its highest here. At peak alt market, you got to around 34% of Bitcoin dominance. Then you came back down to the 70s. Then you came up here. Now, our next opinion is that, you're going to move up this way, which is, again, a drop in dominance. Remember, I flipped the chart. And in due course, we'll probably have a pullback. And then eventually you'll break out to the upside, and we see dominance of Bitcoin falling below 20%. It could mean it disappears completely, or it just gets reduced. There's lots more bigger stuff going on in the space. We find it peculiar that people think the first iteration of a software is the ultimate aim, and everything that follows it is garbage, especially with newer tech, newer capability, newer everything. But there's a lot of people that do that, and then they'll say, well, the Lightning Network fixes this. It allows us to be all things to everything, again. And we're just saying, no, you wouldn't start with those foundations. So back to this, we think this is a rising wedge. You've had a number of spike outs, and every occasion you fizzled back. By the way, that was a 19 billion liquidation event.
Yeah.
It was bigger than FTX, Three Arrows, all of that stuff.
Mm-hmm.
And Bitcoin dominance couldn't stay out of a rising wedge. You had another little wobble there, and it poked. Each one's getting smaller, and it's coming back into this grinding behavior. So this is a key warning strike, and it's far larger than when we got fooled here, which was at a lower level. So I think this time we'll be accurate, but we were early and wrong before, and we own that, and we state that in terms of that. But that means alts will start to overperform. I want to highlight how privacy's been a massive meme theme that's actually done a bunch better. Not that everything in the privacy space can be affected, but I do want to share, utilizing our gold ounces analogy, why Monero is one of our
Monero, right,
outperformers. along with XRP and others. So I will do the same form of analysis. Each one I'll divide by the gold price. Just to avoid decimals, I'm just going to multiply by 1,000. Otherwise, the numbers get a bit small. And I don't know if you noticed when I just typed Monero, this high is higher than that high. But when you divide it by gold, in other words, when you adjust for the debasement in the dollar, you don't have a higher secondary high here, like you do in dollar terms to that. And that actually makes this structure a better structure for upside and a very bullish structure indeed. I'll take it out of the weekly and just get the monthly in there so that you can get a bit more of the history. You can see that this looks like a fabulous continuation pattern that is in the building. This is, of course, log scaled due to the duration, and that is what you're looking at. So we do see, listen, whether there's backdoors or not, and the morality of all of these things, I do see the insiders wanting to use for themselves, the same people that we'd probably consider the captors of true financial liberty. They are quite possibly going to be utilizing some secrecy tokens themselves, and this could indeed be one. We've also had Zcash run, we've had Dash, B, Perky, quite a few things have gone on in the privacy space. That also tells me it's probably we're getting close to some rats leaving the ship, that the privacy tokens are getting attention. We want a higher move that holds somewhere up to here, and then a softening, and then we would see a huge breakout. I'm going to just speculate and give you an idea. There's very few things I think will outperform gold, given we're in a fiat debasement thing. But I do assess that at a certain point in time, a couple cryptos will, and probably others, but they're just not as well technically set up. So for example, we see HBAR, it'll probably overperform as an ISO 200, but it doesn't have the setup that XRP has. It doesn't have the setup that XLM has. It doesn't have the setup that Monero has in a divided by gold, real money basis. This is pretty good. Yeah, go ahead, Versan. Jump in as well, because otherwise...
Oh, no, I appreciate that. You know, one thing I definitely wanted to get your take on is, okay, first of all, like most people still don't understand or grasp that crypto overall isn't driven by innovation at this point. I think the technology has already been there. At this point, the crypto ecosystem is really driven by liquidity. Everything in this market, from price action to the sentiment behind it, it ultimately traces back to where the money is actually flowing from and who's controlling that flow. So I do want to tie this real quick into the repo markets. We see a lot of headlines in the last 2 days about the repo markets. Are you seeing any parallels with what we saw in 2019? And how could this impact liquidity today? And what does this mean for crypto and just the overall ecosystem?
Yes. So the one thing that's been a difficult shake for us on calling this current crypto market is we've highlighted that Bitcoin fell to 4K first before it was able to make the 64, 69K highs last season. In short, it needed a major crisis event from which liquidity could be borrowed to push in post-event the token up. And as you mentioned, the precursor to the CV19 event and our oil price to single digits call was the repo markets in 2019 around September and October. And we've had a similar event. So I've always postulated, do we need a demand destroying event again to get the crooked liquidity that the Fed provided? Many people don't realize banks got bailed out to the tune of 23 trillion, including foreign banks by the US Fed. Swiss banks were sent money just to keep operating. And I'm talking trillions, not normal money. They were given loans. I don't think any of those loans are ever paid backable. This is a very captured game. They've got to keep all the plates spinning until they've got their special gematria day for when they want to pull everything down. In terms of this grand game of monopoly that we've all been trapped in by the banking classes. So with that said, I do find it interesting that we've had a repo event, and the liquidity that was provided into those repo markets was only previously matched from 2020. So we could have crisis, demand destroying event, and then you only get your move. So you might have to get washed out to go down. Now, one of our most viral appearances with you guys was when we said they don't want you to get rich. They need to flush you out. They have to expand an entire ecosystem and contract an old one. They're not giving up their money. They just need the money be big here to move out of debt, bond markets, collapse, contagion, rate spike. They are holders of some of those things by virtue of their own most things. They need to get some of that into, and they need it to be the air that inflates the beach ball that's in the corner of the room from the Jupiter of the legacy system that is collapsing in and of itself like a black star. So there is a transfer of money go up. So when something goes down, something else goes up. Now, they don't want all of us to say, oh, we know this game. We'll just jump on the thing, go up, and all become independently wealthy, not ward of state, totally free to reject medical interventions, not caring about having a bad social score. We're rich, rich, rich. No. They don't want that. They want a mass wealth reduction for which they are the primary beneficiary in your loss of assets. So the flush out could be very much part of it, and a demand destroying event first to the downside before eventually breaking and moving to the upside on the reaction to that event. So I think it's a great question that you asked, and I do feel that what we've referred to as a demand destroying event may well still be possible. Can we say for sure? I don't know. There's musings that they're bringing liquidity back into the market now, and they're no longer doing quantitative tightening. So, they're kind of keeping things going. Or is it, but you don't have the theme and the crisis to do it on the scale that you need to get Bitcoin up to the 150K. We still have a 150K target for Bitcoin in all we said, but it's going to be underperforming the likes of Monero and XLM. Anyway,
it makes you wonder, though, because it's interesting. Vindel and I have been studying a little bit of the history behind these bull cycles, and Bitcoin, Ethereum, and the rest of the crypto ecosystem. These are liquidity sponges. What I'm trying to say here is that, like I said, the infrastructure is already there. They're not really creating value on their own, but what they are doing is absorbing the excess liquidity when central banks do expand the balance sheets, right, and bleed liquidity from the system that is already tightening. And that's why you still see those crypto rallies like 2017 and 2021. They mirrored the periods of massive liquidity expansion through the lower rates. We're already getting lower rates through stimulus. Trump is indicating a $2,000 stimulus. And now we have the repo injections. So I'm just trying to put the parallels together. And also, you could argue that this is exactly why, one of the reasons maybe why gold, silver, and other commodity safe havens are suddenly becoming more relevant today.
Yes, I'd agree with all of that. Liquidity is debasement of fiat and debt. Yeah. So that's invariably good for capital preservation monetary assets, for which gold is the original. XRP for us triggered on that court clearance event in just dollar terms, and has been in a bit of a holding pattern. There seems to be a buy, every time below 2, the wicks get bought up, but it's had a couple of stabs below, it gets well bought up. This is a hammer within a hammer. So it's a little bit listing in a range. We did call the 3.36 a localized high and said from that point, it's going to go quiet for a while. It's been a lengthy period since that call. That happened here on that first green candle above that. Now, if I do what I was doing with Monero and apply the same benchmark divided by gold, again, this might be interesting because I know there's a lot of XRP fans in here. Let's get the right XRP, not a changed broker there for some reason. It seems to have a bug. Let's do that and get Bitstamp, please, and put it on. And you'll see that there's more of a downside lean there to this. It's sort of found support, what we call our funnel support on the breakout, the green line, which is typical. So you got a dip down there and you got bought back up, and you're still slightly red because gold it's not so much of a hammer here. It's more of a red candle, a general red candle, but not as big as the predecessor. So this is where we stand in gold ounces. What do you deduce by this? Well, there's in percentage move terms, there is a point where XRP is going to outperform gold. And it's not something I say much about Bitcoin. I'm seeing the exact corollary. So Bitcoin go up to 150K, take 4 or 5 months about grinding its way up there. There'll be bigger moves in the need to utilize assets by valuation. And that's 1,800%. You know, that's 19 times, almost 19 times from current pricing in gold ounces. So the numbers on the side mean nothing. The percentage gain is what's a useful benchmark. And that's a percentage gain against something that is very capital preservational, more than $1. So you've got to bear in mind that if it takes 3 months, 5 months, or let's say it takes 3 months to happen, but it only starts in 2 months' time, so it's over the next 5 months, gold will have moved in that 5 months' time under the same auspices of a proliferation after a demand-destroying event, for example. That might be a scenario. I'm not saying it will be. I'm just suggesting there's one possibility. So you're going to actually have 19 times the performance of gold in that 5-month period, and that performance of gold is not going to be as flat. It's probably going to have some incline to it. You know, you might have gold move to 5,000 in that point. So you're talking about 19 times something that's moved 20%. So it can actually be more than 19 times. So that's quite a bit of overperformance coming. But right now, is it ready to happen? Well, you've had 1, 2, 3, 4, and you're coming to that key support area, which was our triggering event, when you fell with the liquidations event and you were reversed back out of there. So strong support zone, the funnel, which is the green and red level, but particularly the green level there. So that's pretty positive. And you have pretty much a similar situation for XRP, although I would prefer, I think the absolute number, my apologies, XLM, I prefer XRP because it holds up better in dollar terms in between the pumps. So XLM goes almost bidless and is not nearly as liquid. So it super surges, but then it drifts immensely for an extended period.
I've noticed over the years. The funny thing is that, tying into what you're saying, I'm complimenting everything you're talking about here, but XRP, it's going to always be volatile, in my opinion, as long as it's going to be correlated with these debt-based speculative assets. And I think Bitcoin is one of them that ties us into the debt market, liquidity expansions and contractions. We see that every 4 years. I do believe, though, however, there's going to be a time when XRP does indeed decouple from these markets and simply establishes itself as an independent standard to a degree. And there are reasons for this, but that's when we start to look at the technology overall. Bitcoin is indeed a digital asset, and XRP is a settlement infrastructure. And I think understanding the key difference, not you, Francis, but generally speaking to the audience, right? And you already know this, but there's a key difference in understanding how the infrastructure is being played. You have one built for speculation. You have one that is designed to really consolidate and I think move money around. So XRP, in my opinion, despite the fact that it's been highly manipulated, it doesn't belong in this category. I don't think it was ever meant to operate really as a speculative asset tied to crypto volatility. It's more about architecture, consensus design, et cetera, et cetera. So I think there will be a time and a place on a macro level. And that's when institutional liquidity, central banks, and sovereign payment corridors begin to utilize the asset, not as crypto, but more as a digital collateral or infrastructure component. And I think that's when it will decouple. So I'm in XRP for the long game. You've known that for a very long time.
Sure. And I want to add to your very intelligent statement to support it. There's 2 phases to this process. We are transferring an old system into the new system. And then there's a period once that's completed and the market caps are equivalent. So we've deflated Jupiter and we've made the beach ball huge. That the stability for the utility, because your key point is that XRP is actually has great utility as well, which Bitcoin is inferior both in speed and cost and capability to process numbers of transactions. So what you end up with is you've got a process first where it inherently will later become stable as part of stage 2. But initially, to get to the size and scale for the replacement financial system, it has to be pumped up. So it's kind of like your kid's swimming pool. It packs away, but when you stage 1 is blow it up, get it to the size. Once it's there, it remains at that size and it holds the water and the kids can swim. That's what it does. It doesn't keep blowing up and being a blow up speculative vehicle. And we've got to get through that transference stage from an old system to a new. And I otherwise concur.
It's already happening very quietly. You can already see the infrastructure migration.
Yeah.
Sure, ISO compliance, all that nonsense that you hear, adoption, real-time gross settlement integration, but also stablecoin issuance. Anyways, we're not going to go that route this time. But there are indeed utility anchors that are going to detach from the rest of the speculative infrastructure. And that's the
an argument
transactional.
that those developments haven't been fully priced yet, but it's because the liquidity isn't there. You need the combination of the technological progress that you're describing and also the liquidity availability to properly say, hey, and this has happened, a bit of hype and mayhem, push it up. And I think maybe the demand destroying event angle or some other liquidity provision event with the spotlight being shone on that will provide that surge and bring it to the level that's then needed. And thereafter, it might be inherently quite stable and just utility vehicle.
Yeah. But to your point, they need to wipe people out first.
Correct. Yeah.
They need to impoverish people before making the transition, because that's how you can consolidate power and wealth.
That's right.
That's
they
what
need to be
blockchain's
the
all about.
Primary participants in the inflation stage, and they need average Joe largely to be on the sidelines for that. And the best way is to impoverish them, because we'll chase anything that pumps. We've seen that. Most traders are momentum chasers. They're like dogs chasing moving cars. The car stops, they look vexed, but they'll bark and chase. And we've seen plenty of that. So they need you to be helplessly watching from the sidelines. In other words, you've got more critical issues like making a rent check or a grocery bill to worry about than what's fundamentals of the moment. So I fear for us that a major loss-making event is going to come, and that's where zeroizing bank accounts, North Korea, Iran gone and hacked us, kind of narratives of Russia. It was Russia did it. We must go war. We've got clear evidence, that it was the Russians, bad man, all of this sort of stuff, those kind of narratives, and just the Western banks down. And it's one of the reasons why, as a Westerner, I say you are very exposed, because your average wealth compared to the rest of the planet sees you as an outlier, and it's made you a mark in terms of the totalitarian status, in terms of their objectives. They want that wealth out of you, and they need you reduced to the more menial level of wages that is often found in the third world and other areas outside of the West.
Yep.
So
they can justify their new system, the central bank digital currency, or UBI. And that's why you own gold and tangible assets. And finally, I like to put the nail on it. That's why there's a war on cash. It's because they want to monitor, track, and trace and tax you on everything you own and buy with it. But that's why I use cash to buy assets, because there's no digital trace of it.
And so support retailers that have rejected this "we don't take cash" meme that they've tried to get off the ground with many cool vendors. It's not cool. Support the guys that deal in cash, pay cash, pay tips in cash, do everything in cash. I mean, in some senses, it's the good money, and I hate leaving it, but go and draw it. Keep the ATMs there by using them, and don't always pay with your card because it's kind of convenient. Have cash,
I
pay
totally
cash.
agree. And another thing, this is why, I mean, there's so many moving pieces to all of this, but they've inflicted such economic hardship through how fiat systems work at this point, where people are naturally running to digital currencies because they see the incentive to earn wealth, because it's going to consolidate. That's one. But they don't realize the dangers too, that you are actually containing yourself in their new system.
Correct.
And of course, I'm going to get a lot of hate mail for this. and that's fine. But I think, few people who truly understand can see through the lies of what's really transitioning here into digital infrastructure. Anyways,
Yeah,
please
it's a
continue.
surveillance grid, without doubt, and it's their big dream because it's ultimate control over you. You know,
Yeah,
everything.
you remember that video? I wanted to share that video. Do you mind if I play it real quick?
Sure, go ahead, please do.
Okay, thank you. And I do want to get your take on it because, okay, I'll just share the video first, and then we'll go from there.
It was just a lack of caring, and that's just not who I was. It was just sort of like cold, it was just like cold, and I used to say to him, what's the point of all this? You have all the money in the world you need, you have all the power you need, what's the point? What's the end goal? And he said the end goal is to get everybody chipped, to control the whole society, to have the bankers, the elite people, the bankers and some governor controlling the world. And I said, do all the people in the Council on Foreign Relations believe this way you do? He said, no. Most of them believe they're doing the right thing. A lot of them believe it's better off being socialistic. We have to convince people that socialism is really capitalism. Because America is becoming a socialist country. It's a communist country today.
Let's certainly pivot to digital ID transition. We have to be careful here. We have seen an announcement from Apple stepping into this ecosystem. And what's interesting is Palantir and the intelligence oversight are quietly shaping how these policies and the system is going to be implemented. How do you see this unfolding?
It's very dark and it's very draconian, and it is part of their plan that you referenced that video. Remind me again of the film director. I even remember one of his films, but his name has escaped me. Italian, that was speaking there because his
name was Aaron, if I'm not mistaken. I don't remember his last name.
Yeah, he passed away not long after that disclosure.
After that statement, right?
Mm-hmm. Yeah. And it's a great tragedy, and it's a great insight, a casual conversation with the psychopaths of ultimate power. Is absolute dominance, absolute control. That's the only way they ensure their entrenched existence against the masses, and they won't stop until they get it all. And they want to chip in everybody, was the final statement that he made. And I think that's 100% correct. And you should resist it at all costs. I think it will be godliness. It will be the power of life over death. You've seen what happens when they get under your skin in more recent events. If you don't maintain autonomy over your bodily anatomy and what goes under your skin, then you have lost all privacy, all freedoms, everything, and quite possibly your life. Of course, I've seen early, and the Saudi and UAE are big nations about promoting this. We were about chips, where people were getting their train journey and swiping their hand with chips in their hands, and all of these nations that are wanting to be sort of super tech cool. You need to view them as a similar states to Israel, and they're really problematic. It's really problematic. It's really dystopian where they intend to take you, and your job is to resist this with all your might. Do not take a chip physically in your body. And they're happy that you carry your phones around, but eventually they don't want to rely on hardware that somebody else is selling to you, and whether it's properly charged or not, even though they reserve battery space and they embed Pegasus in. There was another disclosure, by the way, today that I tweeted out that highlights that Samsung, South Korean made Samsung, and it will apply the same for Apple, has embedded Israeli spyware in it. And of course, it goes with the Netanyahu clip going, if you have a mobile phone, you have a piece of Israel in it. They have told you in many single ways. So you are totally snooped on, totally listened to. Everything you type on your keyboard is a capture by language, so they know how to rank you. Some AI is probably ranking you as divergent, think Hunger Games. I'm afraid there's a lot of different films we could start listing for which Skynet, Terminator, and a lot of things, especially when you've seen exploding devices recently, it can get potentially extremely dark. Right. We are being dominated through a dark star nation that is controlling America. and that is parasitic. And I have great concerns for our personal liberty and freedom. And the truth is, on that front, I think we've been sleepers for too long, and I think largely that game is lost. You have to build wealth, and you have to make the best of the years you have, and you're going to have to breed and train your children real smart, because growing up the next generation,
it's very challenging.
It's very daunting, I'm afraid. Yeah.
Yeah, and since I got married, my wife and I, we would love to start a family, but we're looking at all the circumstances and everything going on in the world. So we're trying to find a solution to all of that. But, for the audience, it's important to know that once digital IDs are ubiquitous and really implemented, that means really every asset, every transaction can be every contract too. So smart contracts are going to be tokenized, but then monitored. So it's not just convenience. It's really this is the structural shift of how wealth, how credit, how debt, and compliance are all being enforced. And that means those who really control the digital layer are going to gain enormous advantage and leverage over the flow of money and the people. So it's interesting how we could tie this, Francis, back into what's happening on the macro scale as far as assets like gold and silver and even commodities, how people are positioning themselves. And, even the wealthy people we've spoken to, we have a lot of wealthy clients, 30 million and up. They are all in precious metals. And this is really what the 1%ers are up to. So, I mean, how do we get the majority of the population to really engage in all of this? Because metals are indeed freedom. And if we are going to have digital money, we definitely need a digital constitution of human rights, since everything is done digitally. And then we need to fight for convertibility. That is where you might have some freedom. You know what I mean?
Yeah, convertibility is incredibly important, and you have to utilize that convertibility regularly. Otherwise, it gets the faith in the derivative proxy to the physical asset gets assumed. The blacksmith was able to issue more receipts because not enough times did people show up and ask for the gold, you need to actively convert regularly. That's the key problem, because anytime a derivative proxy, whether a piece of paper from a blacksmith for gold left with him, or a printed note from which is also just piece of paper or plastic now, polyurethane or whatever they're calling them, these fancy new notes, are all just derivative proxies supposedly for wealth. Now the attachment to gold has been removed, and we're actually having a crisis of trust, because the US is in a debt-based collapse, fiat and debt-based collapse, and is weaponizing its monetary system. Stealing the Russian money was the stupidest thing, but it was intentional to accelerate the collapse. So, of course, alternative systems with trade and a restoration of trust. And it's ironic that it's the communist nations of China, the Grand South, Russia, obviously in there, that are actually the ones that are saying we need a trust-based system. They only need, and it suits them now, because it's an alternative to what is clearly captured by America. But we actually have to vote for the principle of sound money. So right now we should be voting for the establishment of those gold trade vaults that China has been doing. And people should be realizing it. If they want to do it themselves, they need to own it physically themselves, and they need to hold it. And this is real money, whether it's silver, whether it's gold. A man with a gun has to come, and if you can purchase without being named for purchasing, nobody even knows, and we have mechanisms to utilize that. That's one of our unique capabilities here at the Market Sniper. People can contact us if they want to find out wow. But you also need to be outside of, or have at least a plan B that is outside, a place that you can stay, ideally your own. So that means another property investment. I'm sitting inside an apartment. We have a couple here. I'm in Panama. It's outside officially of the West, but it is a major trade hub. That's important. The canal ensures it. We have vaulting in a free trade zone that actually was an old airfield that was American. So even if you get a nut of a prior president come in, He doesn't have freedom to come in there. It's got its own police force. You need to thought about all the zombie apocalypse type things that could go wrong for vaulting. And also you need to have some on yourself around. So you have multiple plans in different jurisdictions. How many different nations or continents do you own precious metals in? Some will think it's just enough to be in America, but I'm afraid
No.
it isn't. I don't believe it is. And I believe the most draconian, totalitarian aspects. I mean, I'm going to share a couple of shots with you as well, things we've done that are trying to captivate a couple of things that are going on. The collapsing nations in the fiat and debt-based collapse. Remember that these people have funded themselves, Vandal, by virtue of tax and overspending. So what they've been able to do is they've overspent and they've created inflation. So a controlled demolition, this is what you're facing, occurs when a parasitic hijack of a thriving financial system, usually by insider control, is extracting max personal gain at the sustainability of the system's expense. Think Nancy Pelosi front running, think the loading up on the military industrial complex at the expense of the debts on the United States. These are general actions of willful intent, often framed as incompetence. They're shielded by captured politicians, regulators, and media who are all benefiting from the heist. So they fraudulently enrich themselves as genius speculators, often ensuring the collapse of the system. So they socialize the losses and they privatize the profits, which is very much like the Cayman Island basis trade, which has led to the repo stress in America, too big to fail. And then what comes out of that is tax scavenge mode. Once governments that have been covertly, they've been doing it on the sly, they've been doing it all along, covertly taxing you through inflation and excess government expenditure. Once they then pivot and they revert to totalitarianism, new direct tax initiatives, and cuts to services and breaks to social contracts that they committed to, like the welfare, Medicaid, the pension system, because borrowing has now become too expensive or is untenable. So they could previously borrow and tax you on the sly, utilizing inflation and governmental over expenditure. Once that debt market is at a state where it is no longer tenable or is too expensive, they get more aggressive and they go direct. Tariffs are a tax on American citizens. Anything that has any foreign componentry in it is being taxed higher, and they are getting further tax from that. You've seen more recently, The Guardian was talking about an exit tax for British people that leave Britain. So they're preempting the fact that it's a country in decline, in financial collapse, and they want to trap the rats in the barn. And if you are a clever rat and want to leave before the fire comes, you're going to have 20% of your liquid assets. And that's once you've sold your home and everything that you're leaving and declared you're leaving, taken off you. And the other part that you said is, we'll bring this in line with further expectancies for the larger G7 nations. So they are confirming that rather than being an outlier, the expectation is Canada, America, Japan, France, Germany, Italy, other European nations, and the EU generally are going to be pursuing similar policies. So the Western human is going to be trapped and taxed like a rat in a burning stable. And that is why we say you need to leave, a very unpopular thing. Scavenge mode is coming, tax scavenge mode. They now have to steal from you directly. And the way they do that is they get aggressive. It's robbery now, because they were stealing sleight of hand, smiling, oh, we'll pay more for welfare and for immigrants and for this, we'll be kind, throwing money away. And they were taxing you in debasement. They can't get away with it anymore. The debt market puts a stop. So we've done a couple of key stamps like this and others. I'll be sharing them, but I thought I'd let you come back at me on that as well.
I mean, I'm all in alignment with you. You know this. You know, if we really start to connect all the dots, the macro volatility, gold, silver accumulation, these policy shifts, and of course the digital ID integration, with digital assets, you start to see where we're heading, really. And it seems
Yeah.
like we're, more importantly, entering a phase of massive global consolidation and the realignment as well.
And
Mhm.
centralization, actually. The amazing thing is you're going to get less and less variance via governments. There is no one perfect place to run to. Let me
Yeah,
just warn. What you need is lots of arbitrage possibilities and optionalities and not such bad places. I'm not saying America's a horrible country. I love
of
Americans.
course not.
I love
Right.
visiting America. I love the nature of America. I love the nature of Canada as well. I love the whole vibe and the people. The problem is the parasitic government totalitarian position that is coming to scavenge and what they will do to you. And you need to have a right of residency in another nation so that you can go to a less intense environment,
Yeah.
because there will be degrees to this, just as in the CV19 event, there was degrees of clampdown, bullying, and some of those things. And that was a dress rehearsal for
For what's
cops
next.
following orders and bullying citizens, and citizens realizing government can be totalitarian and a bully. You got your first taste, and it's a shot across the bows of far greater things. And when it comes to what you think is your money and the assets from your hard work, you'll find you actually have a far more tenuous hold on the direction of those things. They will literally come to asset strip you, and taxation is legalized robbery. They can write a law for anything. And this is where another polarization is coming: legality versus morality.
Mm.
You have to understand, inside the financial system, what becomes legal could be anything: theft, anything. Write a new rule, pass it,
Already
you
is.
need the money.
It already is.
That's right.
It's already
And
embedded, and we're psychologically indoctrinated to believe like we still have to pay tax when it's created out of thin air. So that's just an example.
exactly. But you have to recognize and stand on points. So you should set out to underpay in tax extraction, which is part of our principles and what we do, and to overprotect yourself by additional wealth building on all that tax money you've not paid, on account of the complete lack of morality in your government, despite whatever legality they will have written up.
Mm.
And I also talk about the duality of morality. I run a duality morality system. It takes a long time to get that. I always did what I was told, by governments and friends. You must be honorable and loyal to friends. What you must do is you must be honorable and loyal to friends and vendors, pay them cash, suggest they don't have to declare it. And you must be dispassionate and cruel and mingy to statist extractionary forces and always seek to get away from it. You actually have to have this duality. Anything that is statist and represents extraction, they're going to be aggressive and coming for you. You have to be absolutely arrogant. And that's where watching these videos of people who know the law, when police show up at their door for social media and they say, no, you can't come in. What are you doing here? No, I never asked. Do you have a warrant? No. Am I under arrest? No. Okay, then you can bugger off. You're on private property. Don't walk on my lawn. Get back on the path. Piss off you go. That kind of guy. You need to become that kind of guy, even though it's not in your nature.
Yeah.
You have to understand and use their legality against them. You have to be absolutely vicious, while a neighbor would come around and you invite him in and you put him in his couch and put a beer in his hand and watch the footy. You need that duality of morality, because the police have become bouncers for a
Yes.
corporate criminal statist
Mhm.
enterprise that seeks to disempower you, disenfranchise you, and strip you of your assets and your wealth. And
Yes.
they are essential paid bouncers
Yeah.
that
On behalf of
posture at morality.
right. It's incredibly fascinating how this convergence is, the old and the new systems that are merging, just the old world, the new world. Um, it's really scary. It is. And that's why I've always told people, those who really can see through this and understand these dynamics, people who follow you and I think really it's those who are going to be early to see both the opportunity to see how they can preserve their wealth, and more importantly, how they can take care of themselves and their families, their loved ones. I mean, it's really scary. I warn people about all this all the time.
Yeah, it is. And we're living it. We're living it. At the same time, let me say, you were almost chosen and born to be born into this era.
Yeah.
You weren't chosen to live a simple, easy life. And in fact, the notion that all previous lives were relatively so simple and easy and never faced things, you got to remember the Black Plague killed, I don't know what ridiculous percentage of Europe when it was happened. Many interesting theories behind that, by the way, in waters. But anyway, we won't delve there. There's lots of principles, being 19 and, you're coming off one of those beach landing craft and you've got an automatic gun firing at you straight away. Other generations have had their challenges. We can't become shrinking violets and weep. We've actually had a charmed existence in some senses, having lived through the 70s, 80s, and 90s in the West, that other nations haven't had. But it's maybe time to change the coat of many colors for a different shirt. But anyway, you're born for these times, and you can either be deer in the headlight, paralyzed by this, or start taking action. Building wealth is one thing, because having some money is very important to be able to purchase your freedoms by doing valuable things, using their legal system that they set up for themselves, safeguarding that wealth. So that brings us back to things like this and where you keep them and what countries and what jurisdictions you keep them at. Capital gains free if you hold for 2 years. Stocks, crypto trading, everything else that you're going to be doing for building wealth, freedom, optionality. We work on exactly that. So those three things secure your lifestyle of greater and better freedoms. You've got to focus on that, take action, and straight away the depression that you might feel, the negativity that's associated with living with this octopus that has so many arms, you're wrestling an octopus. You start doing the things they did that established them, their power, trusts, foundations, multiple jurisdictions, and you start to use the same weapons they have against them. You buy yourself protection, a great existence, a great lifestyle, become an inspiration. These are the times you're born in, and it's determined by the times and the era and the environment you're born in. Your life is determined by that. If you were born into the Second World War as a 19-year-old, it's a founding experience, and it's going to shape a lot of your views on many, many things. And I'm saying this is your calling. This is your era. It's the epoch of sound money versus the uploading of a digital surveillance financial system. And you need to secure as much of your freedoms as fast as you can and avoid taking all the poison pills that will be offered to you along the way to seduce you into a world of greater security and convenience. Do not take the convenience class with the poison pill.
Don't touch the Ozempic.
Exactly. Do the workouts. Don't take the fancy new drug that's going to blow your heart valves out. Do the workouts, do the cold plunge, do everything else. Everything that is hard is good. Hard first, good later. Not everything that's easy up front. That becomes hard later. And those are the key things: discipline, routine, and that's what our community is about. That's how we help our members moving forward on varying degrees. And let me just tell you, just starting and having one leg of many in place is a great journey and puts you in a stronger place, and starts de-psyoping you and puts you around other people that are seeing joy in the day but are also fighting the same octopus.
That's what I'm doing every day. I live life fruitfully, but I am aware, and there's a difference there, not doom and gloom. So final notes for the conversation: gold and precious metals are going to remain the ultimate safe haven and store of value. Stable coins in the short term, I think, are going to dominate as a unit of account. We'll talk about that another time. I think
they're losing value at an escalating rate. So by the way, on that very point, PAX-G, if you have to be in stable coins, I've used the gold base. I'm not vouching. Some people have said, oh, they're dodgy, whatever. They need to hold for as long as they hold. It's nothing like physically holding it. But if you are in crypto and you want to be in a stable because Bitcoin's coming off and it's not yet ready for the alts, I would suggest your new unit of account of gold, use whichever one you trust the most, do your own research, as well as your new stable coin, by the way, because it's far less volatile than crypto. For people that want to find us, it's the Market Sniper, our YouTube channel. There's booking links for a call in there if you want to do that, or just watch the videos, see if it suits. There's also the Crypto Sniper. There will be a time and a moment where certain cryptos are going to even outperform our unit of account that is gold to a very strong degree, in fact. And I don't think you're far wrong if you're staying around XRP. It just may not be tomorrow, may not be in the next week. This could be something that might even come.
You were right about Tron. You were right about Tron the last time we spoke. I never looked into it. I got too busy.
I didn't
when
show that
saw it
chart
shot
again,
up,
but you have a look at Tron divided the same way. They're all in the same setup. Those are the troika that people can certainly keep an eye on. XR, I think Lumen is a bit, Stellar is a bit too similar to XRP to warrant both. But if you have XRP, Monero, and Tron, you have a privacy, you have a stable coin related token that actually also has an Eastern angle. Don't forget, they're going to be doing a digital upload. I'm not saying move to China for every American. There's going to be there's a communism there. They're doing a digital upload there as well. The difference is they're pursuing the sound money in terms of the gold as the alternative. And that's why on a principle, that's a winning principle long term. In America and the West, we're going to get cope, cheat, and extend on a failing system. And that's why you have to look to be beyond. And it's going to be very wealth leveling what they do. But yeah, the crypto sniper is also there, also on the X under the crypto sniper and the market sniper. Thanks for having me on. And I want to see lots of great shots from your honeymoon when you find a bit of time to take away.
Photographers we're still working on all the photos, and honeymoon, that will be in January. But thank you so much, Francis, for all your support and just your kindness and your time. I want to thank everyone also watching. Thank you for tuning in. These are the conversations that really matter. It's what it's all about. It's about bridging and connecting the dots about sound money and the digital transition unfolding right before our eyes. Until next time, ladies and gentlemen, please take care of yourself. Be vigilant.